Hello everybody. This will be a short update on what I've been covering the last few months. As Daryl said, it's a reduced set of assets that I've covered previously, but it shows some of the key ones and what's going on in the markets around the world at the moment. So just going back to October meeting, I think it was, I'd had a signal in June that told me that a market top was coming. Sometimes the market could be just a few weeks after that signal, sometimes it can be up to a year after that signal. But that signal in June is very reliable. But because I wanted to work out more exactly when the top would happen, I calculated using another tool 4 windows of opportunity for where the top in the Dow Jones might be. This is a weekly chart of the Dow Jones. When it got to December, we realised window 1 and window 2 that had been missed. Window 3 looked like a likely opportunity. So in the January meeting, it looked like the December top was possibly the top in the Dow. We found out that was not the case when we moved to March. We had a slightly higher high in the Dow in March. I then calculated a couple of extra windows of opportunity. Window 3 was crossed off there. Windows A and B, I calculated looking at the daily charts. All this previous work was looking at the weekly charts. And window B and window 4 overlap. At the time I did the initial calculation, window 4 seemed a long time away. That was summer last year, but if I move forward to where we are right now, we have just moved into window 4 and window B. So it's potential that we'll see a top now over the next 3 to 4 months. So window 4 lasts from now, May, through until August, if not September. So potentially we'll see a market top between now and the end of Q2. And the kind of range we'd like to look at is somewhere around about 18,300 up to 18,700. So I think the market could get into that range. We got up to about 18,288 in the beginning of March. So that range I think is quite likely. Looking at the NASDAQ now, this is the NASDAQ composite. Going over many years, you can see the peak in 2000. This rally from 2009 is long in the tooth. It won't go on much further. It looks like it's exhausting itself. We have recently just got a new all-time daily closing high in the composite, but the actual all-time high is still way back in 2000. But it's not far off. We're literally just a few points away. So I imagine we'll take that out in the coming weeks and months over the summer. If not beforehand, but certainly over the next coming weeks. Looking at the NASDAQ 100, very similar setup. We've got a rally here that's long in the tooth, not going to go on too much further, I don't think. But the highs still go back to 2000, so we haven't taken those highs out, either the intraday high or the daily closing high. They still belong back in 2000. Whether we'll make them or not, I don't know. They're still a little way off. That might be too much for it to push, so we might reach the top in the composite, but not the NASDAQ 100, but we'll see over the summer. There might be a strong rally upwards, which might take out those tops. Looking very quickly at the 10-year Treasury, we've had a few months now, where the market has bounced off a low in January. The yield, I still think, may come down and give us one more final low in the mid-year, which is why I've got this opportunity window 1 that goes through from around about where we are now to middle of the summer. And looking at stocks, there's a huge bubble in Apple, both a peak that happened in 2012 and another peak that's happened now. I recognise this using a particular model I've developed, and it did show that we were getting close to a top in Apple. I wrote published an article back in February which suggested that window of opportunity there, beginning of the year, showing part of January and into February, was possibly a top point for Apple. In fact, the top happened 5 trading days later, so I was close but not exactly on point. So 5 trading days later, the top happened. Since then, we've traded sideways, and we've had an intraday high that is slightly higher with Apple, but the closing day high was still way back in February. So it looks like we've got something like a double top forming in Apple. Apple themselves, the company, has gone for a buyback policy at the moment, so they may push the stock a little bit higher. I don't know how much higher it will go, but potentially it is topping out. Equity markets and qualities. Normally I cover quite a few. This time I'll only cover the ones in red. China, oil, natural gas, copper and coffee. In terms of China, as Daryl said, China is now in a bubble. So we've accelerated up from middle of last year. Here's where we were last meeting, here's where we are now. We actually reached a peak and the market has just dropped back a little. So we are in a bubble, and that's a model that I've built that's gone back through many different bubbles in different asset classes and can classify and characterize bubbles. And about the week after last meeting, so middle of April, the signal for a bubble formed with China, and a crash condition is now in play, which means that bubble will eventually pop and come down. Difficult to know when, and what I'm trying to do now is work out where the top is. This rally from late last year is quite a well-formed upward momentum sequence, which I've showed in previous meetings. It consists of three phases. Phase one is an upward turn in the market. Phase two is an acceleration phase through to the end of last year, and then phase three is to where we are now. Once that phase three finished, the market came down sharply, and I think a lot of traders and a lot of people in the market realised that phase three ended that sequence, and more than likely there was some profit taking going on. I don't think that's the top of the market. The signals I'm getting using other models doesn't suggest that that's the top. The top I think will be later in the year. So what I expect now we'll see is another phase one, another phase two, and into a phase three as we go into the summer. So I think there's more push likely in the Chinese market, and more recently the government in China has reduced one of the lending rates, one of the bank rates, I think to drive the economy a little bit more, and the markets I think in turn will go higher as well. What I have done based on this is I think what I had is that window 3 was Q4 of this year. That window is now expanded to Q3 and Q4, so the window of opportunity for China to top out is somewhere between July and December, it's looking like at the moment. As we get nearer and into that window, it may fragment into smaller windows of opportunity, and we may be a little bit more exact in working out where the top of the market is. But as Daryl said, China's definitely in the bubble at the moment. Moving on to oil, it bounced early in the year and has come up from there. This is where we are now. It's been rallying up since mid-March. I've still got two windows of opportunity, 3 and 4, where we might see a further higher low or lower low. We'll get to see that happen. Now that rally that's happened, I sent out a message as part of the meetup discussions saying that rally is a little weak in formation. Looking at the daily chart of that, so just year to date, 4 times over the last 2 months that has failed in terms of upward momentum. So even the market is moving up, there is selling that's going on and there's weakness. So that is not a very strong upward momentum sequence on the daily chart. Moving to the weekly chart, the same chart, we have a phase 1 flip at the bottom of that, and then a phase 2. Phase 2 normally exists with 9 candlesticks. So far we have 6, and they're all showing upward momentum. So if on the weekly chart we can get 3 more strong weeks, potentially that could effectively negate the daily weakness, and we could then see that rally go on. So between now and the end of May, early June for the next meeting, we've got to see whether that phase 2 continues or breaks down. If that phase 2 breaks down, this rally may not continue. Looking at natural gas, this is the long-term view of natural gas. Just focusing on those last 4 years, we've seen the natural gas come down in the end of 2014 into 2015. And it's gone below the low that was in 2012. Focusing on those last 2 years, we've seen natural gas bobble along the bottom, had a March low, then we had an April low, which is where we are now, beginning of May. And I'm starting to see potentially, as well as a low out in beginning of 2016, over the summer we may see a final low. So I've put a dotted box in there, window 2. And we'll watch that over the next couple of months. We may see natural gas bottom out in the summer. Copper, again, long-term view, just looking at the last 2 years. We saw a bounce, window 1 and window 2 opportunities, saw a bounce at the beginning of window 2, and from there it's continued upwards to where we are today. At the moment I don't see any other windows opportunity. That might be the bottom or the low in copper there at the beginning of the year. And then finally looking at copper, long-term view again, and a low forming as we've gone into 2015, just focusing on those last 2 years. So a low earlier in the year, bounced up, it's come back down again, and potentially there's another window of opportunity that I've calculated now that's appeared before something in Q1 next year. So we'll see what happens to coffee as we go forward. So we may see a low through the month of May and then a bounce back up. Okay, thank you very much. Are there any questions?